You rent out your home with Airbnb, and you're happy to share a ride with Uber. Now, the sharing economy is opening up the world of finance, and it's time to explore how renting out securities could benefit your clients.
You mean my clients can lend out their shares?
Exactly. This practice is known as fully paid lending. It enables your clients to generate additional income from the stocks, bonds, and ETFs they already hold.
Okay, so how much additional income could they make?
The income potential depends on the rate borrowers are willing to pay for your client's securities. Highly liquid stocks, for example Meta, Apple, Coca-Cola, or BP, typically generate additional revenue in the region of between 0.1% and 0.3% per year. Less readily available securities could generate returns upwards of 1% per year. The revenues are driven by market forces of supply and demand. Simple economics.
What does the borrower do with the securities?
Borrowers could be using them for various purposes, such as ensuring timely settlement of trades, hedging strategies, shorting, or arbitrage. Unlike the borrowers, your clients are likely holding their shares for the long term, right?
Yes, that's right.
So why not help them make additional income from the shares they don't intend to sell anytime soon?
Speaking of selling, what if my clients need to sell their securities while they're out on loan?
They have the right to recall their securities anytime with just the click of a button.
So what happens to their returns if their stock appreciates when it's out on loan?
Your clients remain the beneficial owners of any loaned securities. So if their shares increase in value, they benefit as usual. And if there's a dividend payment, they are still entitled to that income. Naturally, they're also exposed to share price declines. Any lending revenue they earn is additional income paid on top of their usual share price gains.
Is it safe?
Like any investment activity, there are risks associated with lending. It's crucial for your clients to fully understand and consider these before participating. But guess what? Fully paid lending is something large financial institutions have been doing for decades. And there are currently almost $3 trillion worth of securities out on loan.
So why am I only hearing about this now?
Well, until now, fully paid lending was for the most part only available to banks and large financial institutions who have been making billions of dollars every year from this practice.
Can my clients benefit too?
Yes. Sharegain's mission is to propel the fully paid lending industry into a new era by opening up this opportunity for every eligible investor, helping them to claim this basic ownership right. The Airbnb moment for stocks, bonds, and ETFs is here. It is not only a low-risk way to help clients potentially make passive income, but a key differentiator for advisory services. Talk to your clients about it today and be part of the exciting new sharing economy.